Code, many codes.
Yeah. It doesn't look terrible.
Well, it could be, I mean, it looks like.
Oh, hi. You made it to the credit class. All right.
Mossy's here.
Mossy's here.
Good morning.
Good morning. So we have a credit class today. Jonathan, can you hear me okay?
Yes, I can.
Okay, great. Thanks for waiting to get started with us.
No worries.
Okay.
You got a share screen.
Oh,
Tap back.
Oh.
There you go. Go down to the. And then select the one.
this one?
Yep. And then optimize for video.
Oh,
Check those. Yep. Good now.
now we're ready. Master class, you just taught.
That's it.
All right. Credit, everybody.
Credit.
We're gonna go over a few things. So scores, do's and don'ts, repair, credit history, what it all means. We have the 3 credit bureaus, they merge all together, and we usually take the middle of all 3 to score in a mortgage pricing. So we got ranges of when thresholds of getting better credit terms are. You can go down to a 580. Typically, that's going to require a bit more down payment to get findings. Typically, a 620, 640 is going to be where you want to be, so it doesn't get too costly. Okay. Oh, so remember when we were talking about the loan level price adjusters? So these are basically like, you know, a hit on your interest rate. So if you have a 720 score and you're doing, you know, 30% down, your interest rate is going to be a little bit higher than somebody with a 760. Does that make sense? And then, of course, we have additional loan level price adjusters based on the type of property you're purchasing. Okay, so this is kind of what we look at when we price out a mortgage. So typically, if we're going to do any type of credit repair, credit rescoring while they're in a purchase transaction, we want to make sure that it's going to make sense for them to save. Sometimes it just doesn't make sense to do all of that if it doesn't really affect their credit terms for their interest rate. Okay, so this is an overall general overview of what impacts your score. So new credit accounts, if you have a lot of new inquiries, you have a young credit history, that can affect you about 10%, the types of credit that you have. So they want to see a multitude of different types of credit on your credit report that helps your score. Your payment history is going to be the biggest thing. So late payments can drop your score very quickly. And then as time progresses, those start to fall off and they start meaning as much when you know, move farther away and make positive payments. And then your outstanding balances, keeping under 30% is typically the best. And they look at that as overall utilization as well as just the credit card itself. So either one, it all depends kind of on your credit profile, what's going to make the most difference. And then length of credit history is a big one. And for a minimum amount of time is 6 months to get a credit score. So, and typically for mortgages, you want to have 3 trade lines. So 3 credit cards or 1 car loan, 2 credit cards for a minimum of 6 months, and you should have a good score by then.
Or what if people say like, okay, someone doesn't have a credit and they add him to a credit card or something?
An authorized user?
Yeah.
That's a great way to start your credit history, but you still want to have at least 3 on your own.
So adding is gonna take another 6 months to build the credit for them?
Nope, it should be pretty immediate when you add as an authorized user. It's a great workaround if someone's willing to do that for them, but they still need to start their own credit history with their own credit card using their data.
Okay.
Yeah,
So if you had one that had like 5 different credit author, you know, all they had was authorization
yeah.
user,
it's gonna be hurt, I mean,
They have a score, which is
Yeah.
great, but we look at it as they haven't held their own credit account.
Mhm.
You know, they're not the main person taking out the credit card.
Okay.
Yeah, but that's a great way to boost someone's score quickly, is to do that. Yeah.
Can that also hurt their score if the other person's
Yeah. if
like
they-
starts missing payments or
Yep,
whatever?
yep.
And you're authorized,
Mhm.
then yours gets dinged too?
Yes, but what's really great is you can just call and be removed as an authorized user.
Ah,
Boom, score back up. Cause it just deletes the account. So,
so I guess the thing
Good to
is just, if you have the three, you have to have your 3 trade lines, right?
Yep.
And you can add, it's sort of like, I think it's like spices, right? You
Yeah,
can add your
get a little-
authorization on it, it bumps it up.
yeah,
But if you don't, all you have is authorization and no credit lines yourself, right, then that
Mhm.
becomes, that's the challenge, right? So you can add them, subtract them,
mhm,
the authorization user cards to get a better credit score.
mhm.
But, you know, but you have to have your own credit, you know what I mean? That's the thing. Eventually you'll have to have your own trade
But
line.
this adding thing only happen with people that they don't have credit.
Yeah.
But if somebody has, let's say, 580, and 580, they don't get like a good rate or whatever. If they authorize them to someone else's account that they're like at 800, does that affect or it's not gonna do anything?
It's gonna depend on the type of credit card that they're added to.
Mhm.
So typically, you're gonna wanna look at something. So say your client has young credit history,
Yeah.
you know, they've got like one card or something and it's been open for like 3 months.
Mhm.
If you can have someone add them as an authorized user that's had an account open for 10 years with positive payment history, then that lengthens their amount of credit, history on the
Mhm.
clients. And you'll want to make sure that their utilization stays low on the card that they're being added to. Because you can be added to a card and it makes it kind of negative. If somebody has late payments, high utilization, all of that. So it kind of depends. But typically somebody that just has an old account that they've had forever, positive payment history, great option. Oh, oop, true, or false. So if my borrower pays to have their rental information reported to the credit bureaus, it can impact the mortgage industry scores. Do we think yes?
Yeah.
Okay. If my borrower applies for a mortgage with 2 different originators 15 days apart, this will always count as a single mortgage inquiry. Because these are common things that people are curious about, right?
Yeah.
Removing a medical collection account can cause the score to drop. Disputing a third-party external collection company account can help the score. Closed revolving accounts can still be factored into revolving utilization, and utilization is the, you know, credit limit versus how much you're taking out on the credit card. So, all right, let's see.
They're all.
They're mostly all false. So, you know, if somebody's paying to have their rental information reported to the credit bureaus, we don't care about it. It doesn't even affect it. That's for some other credit scoring model, you know?
Wow.
Yeah, doesn't help them. And sometimes people pay a pretty big fee to have that to get their mortgage credit scores up. If my borrower applies for a mortgage with 2 different originators 15 days apart, that will always count as a single mortgage inquiry. That's false. You still have multiple inquiries, it just doesn't affect you.
Trick question.
Yeah. Removing a medical collection account can cause the score to drop, so that's true. So people, if they have young credit history and that medical collection's been on there for 7 years, and they don't have much other credit, their score's probably gonna go down, because the age of their credit history is gonna go down. Medical collections under $500 are automatically deleted once they're paid. They just come off your credit report. That's a new,
Removing a medical collection,
what was that?
it says removing a medical collection account,
Yeah,
so if like someone like pays it off, it's gonna cause their credit to drop.
sometimes, yeah. If somebody has like young credit history, it can negatively affect your score, because it's the age of credit history
So
that
would
can,
it be better for the person just to keep that collection?
sometimes, yeah. And then disputing a collection and company account can help the score. False. Closed revolving accounts can still be factored into revolving utilization, true. So sometimes people will have a balance, but their card is actually closed and they're like, well, I'm not gonna really deal with that. You know, it's done for, it's just a collection account or it's a closed account, but that can drop your score. So if you pay that down a little bit, update the score, then you can get a little higher. If you drop your utilization ratio. Interesting stuff, right?
Mhm.
Okay, so how mortgage inquiries work. The 30-day exclusion for score consideration. So you can have as many inquiries in 30 days. And those inquiries won't show up for another 30 days. So you can shop as much as you'd like. The 30-day window is basically like, if I repull credit within 2 weeks, my first inquiry will show up, but it won't really affect anything. After 30 days, then you see all of the credit score or all the credit inquiries, and that can drop your score a little bit. So there's a bunch of different inquiries. And they don't always have an impact on the score. It just depends on your credit profile. So if you're applying for a bunch of different credit cards at the same time, or you have a bunch of inquiries, it can start to drop your score. But each credit bureau has either a 14-day window to shop or a 45-day. So it's not just every single one. So how to avoid all the credit inquiries? You can do soft credit inquiries, which I think we're launching in the next like month or two.
Well,
Mhm.
you still have to have the hard code to do the loan.
Yeah,
But during pre-qual,
During pre-qual, the reason being, and she'll talk about that.
Yeah.
I mean, there's other reasons why we do that, but it's not a hard hit.
Yeah.
Which is good, but eventually, once you get under contract, it would have to be a hard hit.
Yeah.
I mean, most of the time, the word I'm looking for you, the soft hit will be, it should equal the same
Mhm.
as the full hit
yeah.
in terms of your credit score.
Yeah, it'll be the same type of report and we'll still be able to do like credit what if scenarios and update and say, hey, pay this down or get this off, or, you know, we
but the
can play.
number of your score stays probably the same, correct?
It could
I would
drop,
think so.
and if they change something,
Mm.
you know,
I
there's a
guess
little
that's true.
variable.
Yeah, that's a good point. You're right.
Yeah.
Because once we pull credit once,
Yeah.
it's good for 120 days.
Yeah.
Right?
Mhm.
So, but then if you pull credit, like you said, if you do the soft hit. And then we would pull it again, you know what I mean? Like, we don't know what it's entirely gonna be.
Mhm.
For sure, you know what I mean? So
Yeah,
that's the thing. So that's the one of the, sides to see that.
Mm-hmm.
But there's
So-
a reason why we do the soft hit.
And doing a soft hit, we can still do all the, you know, simulation and rescoring models, which is where we play with people's credit cards and see if, hey, if we, you know, pay this down $1,000, yeah, you know, then your credit score can go up to this. And then we can do a hard inquiry and it'll be updated after 30 days. Remember us talking about the credit trigger leads? It's quite an epidemic right now.
Mhm.
I don't know if your clients are seeing a lot of that.
Explain what that is,
Yeah, so when we do a credit inquiry,
a hard hit.
hard hit, the credit bureaus sell that information to mortgage companies as trigger leads. And so people get called, online lenders, or just call.
Yeah.
Yeah, and so part of this, the opt-out prescreen.com, if somebody's looking at purchasing a home and they don't want to get called a million times, this is the website to go to. It has a few different things that you have to do. But you can click here, fill out the information, you can mail something in, and there's two different options. You can just do a form online or mail something in, and mailing something in is for like 5 years, I think it is.
Well, if you do the online form,
Yeah,
it's 5 years. That you click on that one.
yeah,
So if you click here. Keep scrolling down a little bit more.
So,
Right, the back, there you go.
oh, there it is, yeah.
So you can opt out for 5 years electronically. If you want to be permanently opted out, you have to mail it in. Which is BS, right? So the thing is, you're automatically opted in.
wow.
You gotta opt out. And so once you pull the credit trigger, right? Some dude somewhere hey, Joe's looking to buy a house, he's gonna call you. And I don't know how to get their phone number. I really don't. We've.
The credit bureau has.
Yeah, we
everything.
monkey around in the system, in our system, to change the phone number, right, to 11111. To eliminate the call, but some people still get a ton of them, right? So I just, I don't know, let you know.
Yeah,
you can-
I don't know what it is. We've just been trying to like get people to start off by doing this. Cause it takes 5 days for it to
Yes.
register.
If you do this first and we pull credit, it takes 5 days for this to hit before we pull. So if we pull, if you click this like right now, and then we pull your credit, it's not gonna be on their system. So you're still gonna get
Calls.
tons of calls.
So so even if you sell a property to a buyer, their name gets added in those lists and they get called.
Well, it's just when we pull credit,
Yeah, this is
Only
it's
just
just only when you pull credit.
because it's a mortgage credit inquiry. So they
Yeah.
sell that data that it's a mortgage credit inquiry.
So you got other people calling like, hey.
My buddy
you know,
did.
We get a better rate if you go with
Yeah, my
us.
buddy
Yeah.
did. He said he got 50 phone calls.
Yeah.
I'm not lying. He was like, dude, he's a firefighter, right? He was like, I got 40 phone calls. They're all telling me our rate's gonna be 2%. How come you're giving me 7? I'm like, dude,
The same thing happened with that last client, remember from Heidi that.
Oh, yeah. He got a bunch of calls.
A lot, yeah.
Yeah,
yes,
So why with other companies, this thing doesn't happen?
another company.
It's not with company, any company, it's
any-
credit,
any
it's
credit.
the credit bureaus.
That's why it's BS, because the credit bureau. should-
the credit
It
bureaus
doesn't matter
are,
wherever they pulled, it doesn't matter who they applied the loan
They
through.
shouldn't be allowed.
and I didn't,
I totally agree.
I never pulled their credit.
I don't know, he was, I think the Vanderbank did it, that's what. I'm
Yeah, the
thinking.
Vanderbank did
Yeah.
it. So it doesn't matter
Doesn't
what
matter.
lender is doing
Yeah.
it because we all have the same type of mortgage credit inquiry, credit report. And then the credit bureaus sell that data.
So for example, like when we do a refinance, remember we get these, so I do
Oh,
a
yeah.
refinance for a guy, right, or whatever.
Mhm.
Then the opposite is true. So when the credit, and we don't call them, but we get notified. Hey, this is a loan you just closed on a year ago. There's a credit inquiry from another mortgage company. You might want to call them. Because it might be refinancing or something else.
Yeah,
Hey, Joe, haven't seen it, you know, so it's still kind of,
I
it's a
still
little
call,
weird, you know
Big
what I mean?
data,
I still call and, you know, I'm like, hey.
Just
how's
to
it
check
going?"
in.
Yep,
Just
yeah.
check, how'd you know?
You know.
You know, you and 50 other people.
But I wanna make sure that they're not like just being advertised to, just like,
Right.
hey, you could save, you know, $50, but, you know.
But
But
it's,
if
yeah,
they
so
fill out this thing, then don't receive.
you got at least
Exactly.
5 days.
takes 5 days
Yeah,
to
so
go
we
into
linked
effect.
it on our website. So when you go to our website and pull up like, hey, you go to Leah's website, right? That will show up there, opt out.
Mhm.
But it doesn't tell you it takes 5 days. They don't advertise it takes 5 days to be on the system. So if they go through it, you opt out, and then you go through the credit inquiry, right? Then it's still not gonna,
It'd be a good thing probably to add to like a borrower or a client consultation, you know? Just,
sure.
you know, like, hey, you know, this is an epidemic right now. These credit trigger leads are
it's ridiculous.
bothersome.
But if you go back to that one site, this is the thing, no, sorry, I didn't mean.
Yeah.
Ridiculous thing. Just go back one more. No, for the website, just go back.
Oh.
There you go. So take a look at this. This is how they do it. Go back up. Back up. Start right there.
Oh, the benefits.
Benefits of receiving our firm offers, right? This is what it says. It says, encourage you to make an informed decision about receiving firm, pre-approved, pre-screened offers on credit insurance or credit or insurance or civil benefits of receiving them. And it just goes, customers provide
Product
choices. They
choice.
learn about have an opportunity to take advantage of offers that not be available to the general public.
Yeah,
Firm offers consumers to comparison shop, which may increase the consumer's buying power. And then it says, this one here is if you don't, right? This is what it is. This site. What is the purpose of the website? Yeah. So, you know, that's what they're trying to sell you on, the fact it's great to get spammed, right?
Yeah, pretty much.
yeah.
Spammy, I want it.
And then, you know, there is like one company that is Priority Homes or something. They have like similar names, yeah,
Oh, yeah.
and they send our clients like mailers.
Oh,
Yeah.
Well,
Mhm.
you have to look at it, because
Yeah.
sometimes you'll get some priority.
So anybody
or
that's
whatever, yeah,
getting
yeah.
getting a home loan right now, it's super predatory. So just have them send a picture to their, you know, loan officer of any thing that they get or
Yeah,
called
especially
on.
when you close, yeah.
Yeah, right after you close is a big one too.
For public record.
Yeah.
Oh, my
Like,
goodness.
when we-
It's really crazy.
So
So,
that might be a good thing for you guys, just call your clients and maybe just check in and during your check-ins and say, hey, there's, just letting you know that when you apply for a loan, that now. I guess they sell your data
Mhm.
to, the credit bureaus sell your data.
Yeah,
yeah, and you can share this
And
website.
Give them the website, say, hey, you might wanna opt out of this. We've had some clients get like 40 or 50 phone calls. Other like lenders, like
Mhm.
that's so annoying, so.
And insurance companies do it too. Yeah. So
Yeah.
there's a lot. Oops.
but that's what we do the soft hit, so you don't have it. So
Yeah.
maybe one option would be, we do the soft hit, hey, opt out,
Mhm.
right? And then, so when we do pull the hard hit, you're not getting your phone blown up.
Yeah.
Yeah, that's why we do the soft hit.
Mhm. So this is all the data that we get on somebody's credit report. So it's every phone number, creditor, address. You can see it all. So if somebody doesn't even know where one of their collections accounts is, typically we can find it and give them directions on how to do stuff. I like to do a payment in exchange for deletion on credit accounts or collection accounts. And that's basically saying like, hey, I will give you this amount of money if you send me in writing that you'll delete this off of my credit report. And then all you do is supply that to the credit bureaus and they take it off the report. So lots of workarounds, but a lot of data. Oh, this is what we use to play with somebody's credit.
Going back to what you just said.
Oh, yeah.
Like, tell someone like, I'll give you this amount of money to remove this collection. So like, let's say someone does have a collection for like $5,000.
Yeah.
And you tell them, I'll give you like how much?
1,000.
Yeah.
900.
Yeah, I mean, it
Whatever.
depends on what type of collection it is. And, I do have a credit guy that does like the letter cycles and like, tries to get things removed. But typically the quickest, fastest way is to settle a collection with a payment. So you might have to call a few times to whatever, collection company it is, but there's no like magic formula.
But then they wouldn't be responsible for like the remaining amount.
Yes, because you're settling it. Typically, a collection company is purchasing a debt pennies on the dollar.
Yeah.
So their profit margins are on how much they can collect above the amount. Yeah. So it just depends. Sometimes if it's a super old collection, they're more willing to settle for less because they just want to get it off their books. But those ones are also great to just get deleted off. So this is what we use to play around with stuff. So you can play and say, okay, pay this down, $1,000 or $2,000. The high credit is just, as high as you can get. So you can play around with raising your credit limits as well. Because you can just call a bank and say, hey, can you raise my credit limit? My income went up. And then they'll raise it and then your utilization gets better. So sometimes it doesn't even matter if you pay it down, you can just raise a limit and then your ratios get better. And you can delete things off of here, close accounts, play with all of it. And so it'll say what the score is here and then what we can expect. And typically we can do a rescore in about 5 days. So you supply some documentation and they directly update it with the credit bureau. So this is what your new credit score would be on your mortgage application. Little extra work.
It's just like, she's really good at that.
Yeah.
I mean, you sit around and just puzzle, it's a puzzle.
Yeah.
I do this and do that. I had one for the lady, she had a 692, 693, something like that. And she's trying to do a conventional loan at 5% down. And the interest rate was just terrible.
Yeah.
Mortgage was terrible. But then we added her to her husband's, or we moved her husband's authorization account or something.
Yeah.
And her credit jumped 50 points.
Mhm.
It was ridiculous.
Yeah.
I was like, and it literally took less than 3 or 4 days.
Yeah.
And so instead of getting a rate of whatever it was,
Mhm.
in her insurance, she got a super low rate and.
And saved a bunch of money.
Yeah.
Yeah. Because the closing costs change because her credit score. Yeah. So this is what we play around with. My favorite.
Of course it is.
I'm like, ooh, a little puzzle here. Like, what if we edit this? What if we do that?
Money whisperer.
Yeah.
Like, they're good at that. So if the score is 790, how
Yeah.
do you get to 800? It
I'm
doesn't
like,
matter. But let me show you. That's what I-
Okay, so this is, how long will negative items stay on your report? So late payment, 7 years, typically mostly everything's 7 years. And just the amount of time that goes since it happened, the less effect it has on it. So yeah. And then credit pulls stay on your credit report for 2 years. But those also become, they don't affect your score the longer that they are there. Ooh, okay. So charge-offs and collections. I kind of covered a little bit of this, but paying off an old charge-off usually helps, but can also hurt. So if somebody says that they have collection accounts or charge-offs or anything like that, just, have them go talk to a lender that knows credit or a credit repair person. And that person can actually do a full mortgage credit inquiry and see the details and how it'll actually affect them. I always hate meeting someone after they think that they've fixed their credit and they've just made it kind of worse, like closing accounts and changing their, age of credit history. Charged off accounts can still be considered in revolving utilization, and that is your utilization ratios, the amount of debt that you carry versus the available balance. The truth about how the score treats collection company accounts, such as medical collections. So the score only cares that they exist and when, how recently they occurred. The score does not consider the balance field for medical collections. So medical collections really aren't that bad. And typically we can waive all medical collections on FHA loans. We don't even take them into account.
So wouldn't it matter, like someone has got surgery, they didn't pay it, now it's like a $100,000.
Doesn't matter. Medical collections are,
There.
it can drop your score because it's a collection account, right? But we don't have to take into consideration medical debt. Yeah. The credit bureaus are screening out paid medical collections. Medical collections with a zero balance or medical collections below 500 are being screened out of credit reports. So yeah, so I think that was in July or June that launched. It was a Biden thing that he put together. Medical collections are just waived off of your credit report at this point, under 500.
Because that makes sense, right? And if you think about how many times you get a bill like that.
I thought I paid it.
Oh, I bet you for $150 from where? I thought it was, you know what I mean? Like, it's so BS how, now you got me thinking about
Yeah.
the way we get collections on that is just ridiculous.
Mhm.
So people just don't know, I think. And so like, why is my credit affected because I didn't know that.
Yeah.
Yeah, so you don't have to negotiate to have a medical collection deleted. You can just pay it and it's deleted. But you can still settle it, if they purchased it, you can save a bit of money. Yeah. Okay. So these are the quick ways to improve your scores. You increase your credit limits, takes a couple days. You can pay down your credit cards to 30% or 10%. You can call the creditor, ask them to remove a late payment. Sometimes they'll actually honor that. Like if you have a one-off late payment, you say, hey, I've never had one of these in the, 7 years I've had your credit card. Is there like an honor system? Can we get one of these removed? Typically they will, especially if you say, hey, I'm going to close this account. If you don't remove it.
That's right.
So improving your scores and buying power. So debt to income. We're going to look at the minimum payments on stuff and use that in their debt to income ratios. So you can consolidate, but still keep those credit cards open. So you just transfer those balances into like an installment loan. Depends on the terms of that. I'm always happy to look over what those like installment plans look like for people because it's not always super beneficial. You can use the snowball method, pay down the highest with the debt payment, like the highest monthly payments. You start paying those quicker. You can refi debts into someone else's name, so somebody can take out an installment loan, personal loan, a HELOC, and pay off your debts for you. And just get it on their credit report. Depends if somebody wants to do that for you. It's a trust honor system, you know? This bottom here, you can just wait for derogatory items to fall off. Oops. And then avoiding while in process to purchase a home. You don't want to do any credit pulls. We'll ask questions about it, right? Did you get a new credit card? Did you get a car loan? Did you do something like that? And then you can't close because your debt to income ratios are too high all of a sudden, you know, buying a couch with a credit card or personal loan.
Yeah, so just an example, my buddy did the same thing, the one I was telling you about, he
Yeah.
got all the phone calls. 3 days before he closes, he opens a credit card online. We're closing, everything's smooth, and all of
Yeah.
a sudden we pull credit again at the end
Yeah.
to make sure there's no other inquiries. And
Yeah.
If it shows up.
Then we have to ask
where-
questions.
Yeah, where's the credit card? We haven't gotten it, so then we don't have the number yet, but you open it, so just.
Or like, hey-
Fiasco for just, we're closing in 3 days and we gotta deal with this.
Yeah,
It's just a pain. You
Yeah.
can get around it, but it's just
yeah.
it's like shooting yourself in the foot.
It's just like, hey, supply us more documentation.
I just had somebody just take a whole bunch of vacation in their work history,
Yeah,
and they went on vacation, they started. working
Unpaid?
Unpaid,
Oh.
they started shortening their work weeks for
Oh,
the summertime,
man.
and they were supposed to close. They
Yeah.
Almost didn't close,
oh my gosh,
barely made it.
yeah. Their debt to income was like,
Yeah, it was
Yeah.
like right on the,
did they have to pay anything off or?
they had to pay something off. They had To make it happen.
Yeah.
It was that close.
Yeah, because that's kind of what you have to do. You know, you get into a corner and you're like, well, let's get rid of some of this like
Yeah.
debt, you know, that's the only thing. Yeah.
One of the best bits is if you ever work at an insurance company, or someone you work with,
Yeah,
hey, look, we need the insurance, we need $50.
yeah, we do that too.
And the guy's like, oh, I'm like, just get it done, and then after you close.
You can
they-
change your insurance, yeah.
Yeah. Hold on.
Yeah,
Probably my worst one ever in history is, I had a call from escrow. And this is like the week of closing, of course, because it was like 3 days before.
Yeah.
Is that when you pull again?
yeah,
Is it-
I think it has to be within 5 or 10 days.
10 days.
Yeah.
COVID was shortened it. but
Yeah.
it's been
Oh,
10
yeah,
days,
this is
so-
a long time ago. This is
Yeah.
back in, I don't know, 03,
Oh,
maybe,
yeah.
ish, somewhere in there. And anyway, I'm like, what's going on? And escrow's like, yeah, but I guess apparently we're not gonna close. Lender said that they don't qualify. I'm like, what do you, I'm like,
Days.
no, it's the wrong, are you talking about the right file, you know? She's
Yeah.
like- And, she's like, call the lender. So I call and stuff, they go, yep, well, buyers aren't, they can't close. They both bought new cars.
Yeah,
Both bought brand new matching cars, convertibles.
I love that for them. That's great. Homeless but carless.
Yeah, like, well, I guess you guys are gonna be living in your cars. They're like, what? We're not closing.
Yeah,
You can't buy the house. You actually now you don't even qualify.
yeah,
You
Yeah.
bought 2 new cars.
yeah.
That's crazy.
Mhm. That's why I always try to do like a borrower consult, right? So we go through, get all their documentation, put it all together, and we go through their pre-approval limits. And then I'm like, hey, don't do these types of items. You know, don't change any credit card balances, don't start buying a lot of stuff. You know, keep everything even keel when you're in contract on a house.
But what if they have like super good income?
Then they're good, yeah.
Well, it is, but you're dealing with.
But sometimes-
The thing is, you're dealing with it at the end. If they have super income,
Yeah,
let them just wait 2 weeks. I know there might be a great deal on or something, but
It's-
it's just tough.
they'll be annoyed by the amount of documentation that they'll have to supply, and sometimes the pricing of their mortgage can change because their debt to income ratios will change. So they might have to end up coming up with more funds to get the same type of rate, you know? Yeah, so it just depends. Typically, I say, hey, give me a call if you're thinking about buying anything or doing any large purchases, and we can look at it and what that would mean for you. Yeah. Yeah,
In what country? There's no item that's written that you need to get in. Like 2 weeks before.
yeah,
Some people you don't know, what they're
Well,
doing.
I mean, that's
They
what we
just
try
love
to tell
cars.
them at the beginning, regardless if you don't buy 5 houses or not. You know,
Yeah.
and it's sort of like, hey, just remember.
Yeah.
It's a pain.
Yeah, like for one of the guys, we bought 2 houses in one day. He picked one in Puyallup and then he picked one in Renton. Remember the one that had the worst.
Did they
case
use the
scenario.
same lender too?
Yeah, they
Oh,
used the
that's
same
good.
lender. He was like, yeah, I want both of those houses. I
Cool.
want the Gallup and I want this one. I was like, we could have closed one and just go for the other one. He's like, we want to close, but his income was good, so he was like,
Yeah, yeah. And buying as an investment property,
yeah.
you know, the rent offsets that payment anyway.
And then the lender said, okay, you have to pay off your car. He said, I'm not gonna pay off the car. Yeah, he goes like, I'll put 200-something thousand down, but I'm not gonna pay off my car because I have it in the rate or something.
He's like, I don't want,
Yeah,
yeah,
some people are crazy, don't kind of predict. what
Yeah.
they're-
it's fun finding solutions.
Yeah,
Yeah, that's what you gotta do. Yeah,
Or like you do, you do a credit, we do a verification of employment too, like you said, the verification before we, I think it's gotta be 10 days, right? So if we ever sniff at anything, like, hey, so-and-so might be switching jobs, whatever, I'm like, well, let's get the verification, because once we do it, then we don't do it until we close, right? So
Yeah.
that's the thing, and if we get a sniff of it, it's sort of like, hey, you tell our processor, hey, we can do the verification, well, we have a couple more days, you really wanna do it?
Yeah, I
now?
really wanna get going.
Today.
Just get it, yeah, do it today.
Yeah, so.
any other credit questions? Does all of that kind of make sense?
No.
Or like little tidbits you can share with people, like just don't pay off or do anything huge on your credit until you talk to a lender or somebody that knows credit. Cause Credit Karma, you can kind of play with stuff and see, but that's a different scoring model than what we have. So ours is like the most intense credit inquiry.
The difference between all three bureaus, like, I still just don't know.
Why aren't they the same?
Yeah.
Who marks what, like, cause I'll have two bureaus that my credit score is like ridiculously good and one that I'm like. Same payment, same everything, like.
Yeah.
not
So-
really.
That's why like rule of thumbs don't really work too well with credit. Because one of the credit bureaus likes, the ideal utilization ratio is like 10%. And then some of them are 30. So it just depends on the credit bureau. They each have kind of their own rules on what they weight differently. And it all depends on, what's being reported. So some credit cards or collections or loans can only report to like 2 of the 3. It just depends. So when we pull a credit report, we can see where they're reporting and we can see what the differences are between all 3 credit reports.
So there's 3, can you explain how we price out, like, which credit score we use?
Oh, the middle of the 3.
Yeah, so.
Yeah. So you have Equifax, Experian, TransUnion. We pull the tri-merge report, all 3 of them together. And then what we use to price a mortgage is the middle of all 3 of those. FHA, it's like blended too now.
Yeah.
Yeah.
So you got like a 300 or $500 or 500 credit score, an 800 and a 700.
Or an
take the
East.
700, that's
Yeah.
why they do the average. In case one of those bureaus reports something silly.
Yeah. So sometimes it, doesn't matter too much if one credit bureau's terrible, for a mortgage at least. Yeah.
Yeah.
So
Well,
opt out pre-screen, everybody,
someone changed the name, right?
they changed their name.
Yeah.
We see all of their names that
I
they've
know,
ever
but
reported.
They don't, the credit doesn't transfer it,
Oh, it sticks to your social.
because we had a deal
Yeah,
and we had like 10 days for closing. But I went to get his passport, his name had FNU, like first name unknown. He just put his name in there, that, okay, this is my name. And then the lender was like, under this name, there's no credit at all. And then we have to mail documents to TransUnion, like, and all that, to transfer his previous credit
Oh.
and his new name.
interesting. So how long had he been in the country?
6 years,
6 years? Wow. Yeah,
because you have to be here 5 years to get a use
Yeah.
passport, so
yeah.
more than 5 years. for sure.
Interesting. I haven't seen that
And he has
before.
a house too,
He already bought a house?
like a condo back
Yeah.
3 years ago. 4
Yeah.
years ago. That was funny, we used to use them for Alicia's deal, Derek,
Yeah,
as a co-signer. We send everything for the lender, they look at it, okay, good, and then After he put like, oh, we cannot find any credit under this guy's name, and the guy was like, no, tell him I have a house, I have 800, like credit, how come they don't see nothing in there?
Interesting.
And then they find out that the name was changed, so we had to call all these credit bureaus.
Yeah.
Say, hey, this is the guy's new name. And I have faxed a lot of them, but still they couldn't, because let's say that's gonna take a month
Yeah,
to update everything under his name. and
Yeah.
we have to-
I'm sure like during a transaction that would cause a huge headache. But if he did it like the month prior, then we would see his, new name, because
Is it
eventually it
updated?
would
Yeah.
update.
Or
It
still,
should be updated now.
Yeah.
Yeah. I think we'll,
Yeah. You have some good stories.
you definitely have.
Mhm. Okay, that's our credit class, everybody.
Awesome, thank you.
Yeah. Oh, any other questions? I don't think so. I think he left.
You did.
Okay, how do we
So,
start there?
and it-
And?
and all.